Last week, we talked about a USDA report on U.S. farmer income from last year, along with projections for 2026. This week, we dig deeper into the issue and focus solely on Mississippi. Recently, Drs. Kevin Kim and Brian Mills with MSU's Ag Economics Department released a report on farm income. I sat down with Dr. Kim to discuss their findings and find out how Mississippi stacks up to the rest of the country.
So if you look online and search for different kinds of agricultural credit survey or farmland value survey, there has been no study that was conducted in Mississippi. We see all these reports from Midwest and other regions, but there was no single study that focused on the Mississippi. So starting from last year, December, we started to collecting this survey from the agricultural lenders and agriculture consulting firms within Mississippi to get a better understanding of what's going on in our state. So not surprisingly, as we discussed last week, most of the respondents replied that the farm income level in the state has decreased in 2025 compared to 2024. Liquidity and the solvency improved in 2025, which is not surprising because we know that livestock producers had a much better year last year when compared to the crop producers. And when we look at the farm loan default rates, we saw a slight increase on the farm loan default rate in 2025. However, when compared to the long-term historical average, it was still a little bit below. There was a slight increase in the bankruptcy filings, however, it was still below the historical average.
Well, were there any new insights about the farm loan interest rates?
So farm loan interest rates slightly decreased in 2025, and this was followed. So the interest rates in Mississippi ranged from 7% to 7.25%, which was slightly lower actually than the commercial banker survey conducted by the Federal Reserve System.
So that means less farmers in Mississippi going bankrupt as compared to the rest of the states?
That not necessarily, but again, because interest rates were a little bit more favorable within the state, that could be the case, yes.
Well, what did you find out about farmland value then?
So we generally say that farmland value is a function of profitability. And as we just discussed, and as we discussed last week as well, the farm profitability decreased in 2025, especially for the crop producers. However, based on the survey, what we got was that cropland value actually increased in 2025 despite the low profitability. And of course, pasture land value also increased in 2025.
Okay, well then bigger picture here, at least for 2025. How does Mississippi stack up in comparison to all of the other states? Are we worse off, better off, or about the same?
We are about the same, but again, so within our state, there are areas where we have more crop producers, and we have areas where we have more, livestock producers. Of course, producers who harvested corn, soybean, rice, or cotton performed worse than the previous years. However, we had a lot of upsides, like story coming from the livestock heavy region.
All right, well, what is the expectation for farmland value this year, 2026?
More than 70% of the respondents said that they do not see an increase or decrease in farmland value in 2026. Only 30% of them replied that they sort of anticipate increase in the farmland value. It is mainly because there's a lot of uncertainty caused by the trade issue, and the low profitability definitely puts a downward pressure on the farmland value market.
Well, what else should producers look for this year, 2026?
So I know I've been saying a lot of negative things about 2026, but there's one positive note that I want to leave, and that is interest rates. So we expect that the farm loan interest rates to go further down in 2026 because we expect the Federal Reserve to decrease the underlying interest rates throughout the year. So they will translate into more favorable interest rates, whether we're talking about the farmland real estate loan interest rates or operating loan interest rates, okay? So lower interest rates will basically open up a door for refinancing opportunity. So more favorable rates are again expected when compared to especially 2024 or 2023.
So at the end of the day, although it seems 2026 is going to be a bit more of what the past few years have been, not any big changes in that regard. But if farmers want to be able to stay solvent, they need to pay attention to every single cent that goes in and out of their hands, right?
That's right, that's right. And so that's the major topic of farm financial management. And Mississippi State University Extension, we do have free online farm financial management course, which is available for anyone who wants to learn more about farm financial management. So if you are interested in those topics, feel free to reach out to us, and we will give you the link where you can take those courses.
Looks like Mississippi is in a similar situation to the rest of the country. Farming budgets tight and getting tighter. For assistance in budgeting and general advice, you can reach out to Mississippi State Department of Agricultural Economics.